Hello, my name is Dave Welch. Please know that this is for information and educational purposes only, and to make investment decisions, you need to consult your own financial advisor or broker. So as you may notice, I'm wearing my Arkq swag. I don't know if you can see it, but here, I'll stand up for a little bit. There you go. There's the formula, and it's based on Wright's Law. And Wright's Law means basically that you need to, for every unit of production, the price, as a unit of production increases, price will eventually start decreasing. So it's not similar to it's kind of like Moore's Law, but Wright's Law has been around much longer. So the link to that is in the description on how you can get your Arkq swag from Kathy Wood's investment company. So today I'm going to talk about Arkq updates. Number 2, what is an ETF and why do I invest in them? And number 3, I'm going to talk about next week's video. So the markets have been very volatile, and so have the Arkq funds. So here's a clip of each fund's performance for the past week. Okay, so here's my sister's watch list. My sister who passed away from a genetic disorder. Which is why I invest in Arkg Genomics to begin with. So here's Arkg. And over the past 5 days, I've got it here actually that's the past 5 years. It's outperformed Arkq, but let's go over the past week, which is the last 5 days. In comparison, I want to do the S&P 500, done. And then comparison, I want S&P 500, done. And that's the SPX.X in gray. So over the past 5 days, Arkg has underperformed. Actually, in the beginning of the week, it went above the S&P 500, and then it ended up 1.3% below the S&P 500. So, not to fear. I usually, if I have some cash sitting on the sidelines, I would buy. See on Thursday where it dipped way down, that's where I would buy some more shares of Arkg. And so, as you can see over the past year, the S&P 500 is in the gray line. It's only gone up maybe 20%, whereas Arkg has gone up 215%. So let's go back to 5 days and go back out and go to Arkk. This is what I'm invested in, our Arkg, Arkk, and Arkq. So let's go look at Arkk. I have shares of this, and this is, you can see that it's a roller coaster race. S&P 500, looked like it tied with the S&P 500 at the end of the week, and there was buying opportunities on Thursday again of Arkq. Over the past year, there's the past year, there is Arkq at 170% up for the year, whereas S&P 500 again is only about 20 to 25%. And then the other one I'm investing in is Arkq, and that one is the Autonomous Technology and Robotics ETF. So go back to chart. Let's go back to the last 5 days again. So Thursday was a buying opportunity for Arkq. Over the past year, Arkq is up 130%, and the S&P 500, I said 20% before. It looks like this is more clear at about 18% for the year. 5 days, there you go again, Arkq. Okay, so let's look at funds that I'm not invested in. So ARKW, that one gets a lot of press. Same performance as the other Arkq funds. There's a buying opportunity on Thursday over the past year. ARKW, 170%. And then compared to the S&P 500, which is the gray line down below. Let's go look at ARKF, which is FinTech. Oh, I forgot to mention. So ARKW, it is the next generation internet ETF. So ARKF is the FinTech. So let's look at the chart. And over the past year, it went up 137%. Over the past 5 days, it did a little better than the S&P 500. So up 2%. The S&P broke even. There was, again, a buying opportunity, it seemed like for all stocks on Thursday morning. So, and ARKF seems to be a little bit more affordable. It is the FinTech, or Financial Technologies Innovation ETF. So, and then It's traded on the New York Stock Exchange. Arkq. W is traded on the New York Stock Exchange. Arkk is traded on New York Stock Exchange. Arkq is traded on the Chicago Board of Option, or the Chicago Exchange. I think that used to be known as the Amex. And what did I miss? Okay, same with Arkg. It's traded on the Chicago Exchange. Okay. Here's an update of ARKX possibilities, which is the Space Exploration ETF. All right, here are the ARKX possibilities. I've talked about this in previous videos, and the investments I have here, I believe, are what Kathy Wood may place into this ARKX ETF, our exchange traded fund. But one that is in the news lately is FLIR, ticker FLIR, and this company doesn't look at first to be a space exploration company. However, the cameras that this company manufacture are on the Mars Explorer, the one that just landed on Mars. It is Perseverance is the name of that rover that just landed on Mars. And the images that were taken of Mars were from FLIR cameras. You would think, would they be GoPros or something? No. FLIR manufactures durable cameras that can be flown in space on spacecraft, and I found out through other sources and just doing a lot of digging that these cameras were placed on the Perseverance rover. So here's the news unmanned ground vehicles market worth $7.45 billion. It mentions FLIR in that news. And then let's go and see what the rating is. So everybody's calling this a hold, except for Market Edge, which is calling it a long investment. You can invest in options here. And then level 2, of course, today's not a trading day, so we're not going to go into that. So here's the chart compared to Arkq. So Arkk is in the gray line, and so this FLIR will be going into ARKX, and it currently is in Arkq, I believe, and it might even be in Arkk. So, but you can see how this FLIR stock is performing against Arkk over the last 5 days. Over the past 5 years, Arkk has performed much better than FLIR. So in the Arkk in the gray line. So Arkk has gone up 170%, whereas FLIR it's actually gone down 4% from a year ago. All right, so, and then I haven't really added anything to this list. Please let me know in the comments if you think anything else should be added to ARKX possibilities. So what is an ETF? Simply, it is an exchange-traded fund, and ETFs are all that I invest in. So ETF trades like a stock on regular exchanges, and you can buy and sell them, buy and sell options in them, just like regular stocks through normal stockbrokers such as TD Ameritrade for little to no fees. So each ETF may contain either only stocks, bonds, commodities, or currencies similar to a mutual fund, but tend to charge lower fees. These fees are not charged to your brokerage account, but rather charged within the ETF. So for example, Arkk ETF has a management fee of 0.75% per year. So if you had $1,000 invested in Arkk, Arkk would charge $7.50 per year from within your shares. You won't see this in your account, but it will reduce the value of Arkk by $7.50. This is not noticeable to you, but if you nitpick Arkk compared with external performance of the stocks within Arkk, you will notice the 0.75% reduced performance over a year. So Arkk is in a sector of ETFs known as Thematic Etfs. ETFs are categorized into different sectors, which are stock index ETFs. So they invest in indexes such as the Dow 30, S&P 500, Russell 2000, etc. Then you have thematic, otherwise known as industry ETFs. I prefer to call them thematic ETFs, so based on a theme. So these invest in themes such as space exploration, which is the upcoming ARKX ETF, or clean energy, such as QCLN, which I'm invested in, or innovation, such as ARKK, which I'm invested in, or artificial intelligence, such as ARKQ, also I'm invested in that one, and or financial tech, such as ARKF. I'm not invested in this one. So commodity ETFs is the next one, and next category of ETFs. These invest mostly in commodities such as gold, silver, copper, lithium, oil, or coffee, and there's many more. So, but those are commodities only. So tangible commodities. And then currency ETFs, these invest in fiat currencies, but they exclude Bitcoin and cryptocurrencies. So the cryptocurrencies are back in the thematic ETFs. Yeah, so those ETFs will invest in currencies such as the British pound, the European euro, the Japanese yen, the Canadian dollar, the Australian dollar, or the, you name it, the Mexican peso, etc. And then you have bond ETFs. So these invest in municipal, government, or industrial bonds. So these could be, municipal bonds are like municipalities such as, Houston, Texas, or New York City, or counties, you name it, throughout the United States generally. And then government bonds tend to be treasury bonds traded on the government exchanges. So like when the government sells treasury bonds, the ETF will buy these treasury bonds, and you don't really have to think about it. You just invest in the bond ETF. Then you have inverse ETFs. So these ETFs focus on shorting shares of a stock, which is very high risk. And I've talked about them in previous videos. So the ETF manager actively shorts stocks in an attempt to make money when a stock goes down. So basically, shorting is borrowing shares, selling them immediately, then buying them back at a lower price when you can pay back shares you borrowed and keep what's left over. So of these ETF categories, there are actively managed ETFs such as Arkk funds, and passively managed ETFs such as QQQ, which is it tracks the NASDAQ 100, or SPI, which tracks or invests in stocks that are in the S&P 500, or QCLN, which tracks an index that follows the green energy index. So then passive ETFs follow an index that may only trade shares of stocks within their ETF on a monthly or quarterly basis, depending on when the index, their ETF, is updated. So for example, when Tesla got added to the S&P 500, the ETF SPY had to buy shares of Tesla at market price in order to add Tesla to their ETF. An actively managed ETF like ARKK, which also owns Tesla, can avoid this and buy Tesla when Tesla's share price drops, so they could buy Tesla low. So why do I invest in ETFs only? It's lower risk, and I can spread my money across high-value stocks such as Tesla or Amazon for just one share of an ETF, say, such as one share of ARKQ. ETFs are also cheaper than mutual funds due to lower overheads. I can trade ETFs just like stocks with no commissions through my broker, TD Ameritrade, and their link is in the description below. So the disadvantages of ETFs, you may not get the dividend a stock within the ETF is paying out. So for example, say AT&T is in one of my ETFs, AT&T pays a dividend. I may not see most of that dividend paid out to me in my brokerage account. So it may go to management, or may be reduced by the management fees. But then there's also lower liquidity, which means there's lower volume trades, which hinders trade ability. So if you want to sell shares of, say, QClean or QCLN ticker, It may take longer to sell them at the price you want because there's fewer buyers of this ETF compared to a regular stock such as Tesla. So Tesla has high volumes, so tradability is very good. In other words, say, like, I want to buy Tesla at market price, I know I can get it right away because there's such a high volume of trades. So whereas QCLN, maybe there's only 1,000 trades a day. I'm sure it's higher than that, but I've seen it very low in many ETFs. So you got to be careful about that when you're investing in ETFs, that of the tradability or the volumes. If you see high volumes of the ETF, which you normally see in Arkk or Arkq, you see high volumes, it's easy to buy and sell those shares. So next week, I'm going to get into the weeds of ETFs and what net asset value is and what it means when an ETF is trading at a premium or a discount. So that's it. Thank you. Bye.